Hi, my name is SK and this is Thought Infrastructure right here on Clean Money TV. This is brought to you by Gold Finance Academy. Today we want to talk about something quite interesting, something relevant to the times. Today we want to talk about market sentiments. What are market sentiments? These are feelings, emotions that drive the market. In the market, people don't do what they need to do. People do what they want to do. And the interesting part is wants are driven by emotions and our feelings. So there are two emotions in the market. The first emotion is greed. The second emotion is fear. They say when greed or fear is injected into the human mind, they become irrational. When you're looking at this in terms of business, the same exact thing happens, especially in an economy. There is a saying that states, economics is human behavior and how it affects demand and supply. If human behavior can affect demand and it can affect supply, the question is, what influences human behavior? Are human emotions manipulatable? And it takes us way back to our conversation of saying emotions, greed and fear. At this particular time where we have this corona crisis, anxieties are up, and therefore we notice an emotion in the market that is prevalent currently, and that emotion is fear. When people are fearful, they're irrational. Ever since the market existed, people have always rode on these emotions. They say greed never fails, fear never fails. They always produce the same exact result. At this time of anxiety, we need to be observant of fear so that we may not be victims of fear, but we may be sound in mind just to be able to see the opportunities that come in a crisis. A week ago, we saw in the New York Stock Exchange that after this pandemic was announced and how fast it has been spreading, the market got into a panic because people became irrational. And when they became irrational, there was a panic sale. The market always will try to protect the value of the investment in the market and the capital that has been applied to the market. And how do they do this? The market will always shut down just to let people's sentiments go down, ease down, for people to relax and the anxiety dies out. Nairobi Securities Exchange as well shut down because after the announcement of coronavirus, the market as well crashed. And the hedge in Kenya is by the time the market reaches 5%, it ought to go off. So it was shut down again to bring people to that place of fast sleeping on it and letting the anxiety go down, and then people become rational again and participate soberly in the market. In this time of a crisis in the market, the question is, are there opportunities? There's a principle that says, never waste a good crisis because it carries the best opportunities. The question is, in this crisis, what are these opportunities? There is a saying in the market that says, when people are greedy, be fearful. When people are fearful, be greedy. Another one says as well, when there is blood on the streets, it's time to buy. What does it mean? Blood on the streets is when the counters turn red and it's time to buy because all counters are discounted in price. Currently we see that all counters are discounted. So it seems like all prices have gone low enough to create an opportunity for buyers. So it's not a seller's market, it's a buyer's market. This is the sequence of how a crisis plays out in a market. immediately a crisis hits, whatever the crisis is, whether it's a pandemic like the coronavirus, whether it's a war, whether it's an election, whether it's something unexpected like a bomb blast. When such happens, the market will always react. And most of the time, the market will react negatively. When the market sentiments are negative, the stocks plummet. When that happens, number one, the markets will always shut down the stock exchange just to get people back to a place of rational thinking, because panic buying is obvious. The second thing that happens is, now that stocks are down, when the market opens, there is normally as well a liquidity crunch, because now all market participants do not want to move their assets until the prices go back to where they are. Prices always go back, because in the market they say the market will always correct itself as a principle. When liquidity dries up, then the next thing is buyers normally now come into the market and now take positions and buy as much as they can. And this is the opportunity in every crisis. In an economy, we have to appreciate that there are two kinds of people. There are bulls and there are bears. Bulls are people who buy when the market is going up. Bears are the people who buy when the market has gone down, only to sell when the market goes back up. So at this particular time, it's interesting for us to stop and think rationally and say, or ask ourselves, is there an opportunity in such a crisis? As much as everyone is afraid, we have to as well realize that we are working on the scripture that says, I have not given you the spirit of fear, the spirit of love and a sound mind. Soundness of mind, therefore, is an asset that is needed at such a time as this. As well as we look at the other scripture that says, be still and know. It's impossible for us to appreciate what opportunities are there unless we bring ourselves to that place of being still. Being still is working from a place of rest. When we work from a place of rest, then we can give leadership, guidance in such a time of crisis. And at the same time, we can have an opportunity to explore on the depressed prices of the market. All assets in times of crisis, elections, wars are always depressed. And every time when the market corrects itself, there is always a wealth transfer. So ladies and gentlemen, therefore, I bring us to the point of challenging us to think soundly, in a sober way, and to think rationally, because the world is not over. This is not the end. We don't live as people who don't have hope, but we live as though who have an assurance of a tomorrow. If we have an assurance of a tomorrow, then we have to borrow a Joseph effect. And the Joseph effect is, in times of crisis, you rise. My name is SK, and this is Thought Infrastructure, and we are talking about market sentiments, brought to you by Gold Finance Academy, and this is Clean Money TV. Thank you very much. Till next time, stay safe, stay clean, and explore this crisis.
This is Clean Money TV.